review packet go for you?
Actually did better than I anticipated myself. Like
That's
literally, I think I was stumbled upon like 2 questions, but other than that, like I did better than I thought.
That's fantastic. That's what we like to hear. That's what we like to hear. I mean, um, I think if that's the truth, then you're going to be in really, really good shape on the exam itself. Because I think with any particular section, it's unrealistic to think you're going to get 100% of anything right, and math included. So if you get it down, and when you think of the fact that traditionally we know that there are sections that people struggle on the most, if you can get to where you're getting even 70-75% of the stuff right in those sections, you got a fantastic chance of doing well on the exam, because the other sections do sort of bail you out somewhat. So I think that's real good. Yeah, I'm hoping the hurricane goes somewhere else for a number of reasons. Obviously, I don't think any of us need to deal with that. I haven't looked at projections this morning. I got a late start this morning. We actually went out to like dinner last night, first time in forever. We went to a local restaurant. It's like one of our favorites. And we know the guy who owns it, and they did a good job with the whole. I mean, we're like seriously just stacked up, like completely quarantined around here. It's crazy. But they did a really good job with the distancing and that aspect of it. So it was nice to get out and have a real dinner. I had forgotten how expensive that process is. I mean, because it's a nice restaurant too. So, dinner for 2 people when it's $200 before the tip, that's it's a good dinner.
Those are the best meals, Travis.
It was a good one. It was a really good one. There was alcohol involved, and
that's probably why.
And they make a good drink.
There's this restaurant called Oro, and I just referred one of my really good friends from college there, and they legit bring you a whole like little bubble bath and a little rubber ducky with your drink, and it is delicious.
Yeah, no, these were definitely no bubble baths, but they were.
Thank you, Anna. I've been playing with them, girl. It's so hard. 27 years and I've never had bangs.
Yeah, there you go. There you go. Elizabeth, I am sorry for your loss. I'm sorry you have to go to a funeral today. I can't imagine dealing with that, like from the family's perspective right now, just because things are so crazy. We had actually not close members of my family. I mean, I have my dad's side of the family is huge in Eastern North Carolina, but 2 members of my dad's family actually died in a house fire.
Oh dear!
It didn't happen the same day that our dog happened, and I didn't know about it when I saw you all on Wednesday. I did not know that had happened, but they, the house caught on fire, and their adult son who lived with them made it out, but the parents did not. And so I know I know that's something really weird that they're dealing with right now, is like, how do you have like visitations and and that sort of thing. And my dad called me and said, well, if they have a visitation, should I go? And I said, absolutely not, because my dad is seriously immune compromised. I mean, he spent 14 days in intensive care about 2 years ago, and I'm like, no, you're not. No, they know you're thinking about them, but you're not going around a big group of people. Not happening. I hope he listens. Something about when they, just the fact that your parents, even though you're an adult, they don't listen still. Like, they still think they know better.
Yeah. Thank you, Travis.
Exactly. Well, I hope everybody else is having a good Saturday morning. Things are, and I appreciate so many of you saying such kind things. Things are much better around here. It's hard. Then I don't think it gets easier, but it gets not so raw, and I haven't had a super ugly breakdown moment in the last. I didn't have one yesterday, so that was the first day I didn't have and the day before I was pretty good. I'll tell you the truth, I was pretty good most of the day. I mean, I had my moments, of course I was picking up stuff around the house and I would just stop and think, I'd cry a little bit and then move on with my day. But I went to the grocery store to get stuff to cook on the grill on Thursday evening, and came out with my groceries, and I have a power back hatch on my car, Buick Enclave SUV, so you hit the button and the hatch opens up. And in driving my car to the grocery store, I hadn't even thought about that his bed and blanket were still in the back from when we took him to the vet. And so I came out with the cart of groceries, and I hit the button to open the thing up to put the groceries in there, and it just, I'm sure everybody in the parking lot of Lowe's Foods thought I was insane because I was a complete mess. But we're getting past that. We went out last night and we had a nice dinner, and we had drinks, and we toasted him and thought about him, and his brother and sister are doing pretty well. His brother, they've been together for 12 years. He's looking for him everywhere. Bless his heart. He just, he roams the house and he's looking in every room. And, it's like he wants to go for a walk, but he doesn't want to walk. He wants to go out and he wants to come back in. I think he thinks that if we leave and come back, maybe Barney will be here. So it's like he begs to go. And then we get across the street and he turns around and he wants to go back to the house. And then he comes in and he searches. And so we're working with that. But Michelle, who was with y'all on Wednesday, she made homemade dog treats and brought and left them on the front porch for the other two yesterday. So they've been very loved up for sure. They're getting very well spoiled. Every night it's like nightly. Okay, everybody pile on the sofa, all in one big pile up here. It's just legs and elbows everywhere. But everybody's hanging in there. So, but I appreciate y'all.
Travis, my cat passed away. We had to put him down right when I came home from college, and 2 months after, and we had finally started to come to the fact okay, he's gone, and we didn't cry as much, and we got something in the mail from the vet office. And it was a quote talking about how one day you guys will meet in heaven. It was called The Rainbow Road. And then they had his paw prints on the bottom of the page. And that made me break down. And every time
I fully believe I'll still have that moment. Yeah.
Oh my gosh. It was so, and we weren't expecting it. That's the main thing. And then my mom started bawling and my brother came upstairs crying. He was like, look what we got in the mail. And I was like, oh my goodness.
Yeah. But y'all were very sweet, and I apologize. It was bad timing for the end of your class, but hopefully, and I know I stayed around for the morning on Wednesday, but I appreciate y'all being patient with me. But other than that, we're here to talk about math today. So let's talk about this math packet and make sure you don't have any math questions. And I do have that I'll be sending out not too long after we're done today, a final review test for both the national section and the state specific section. And I will tell you, it's a lot of questions. I dumped everything I had at you. And so don't be daunted by the number of questions. It's simply meant to, give you a really good indication. But here's what I will tell you. It's the best indication I can give you of what you should expect to see on the final exam or anything that comes from the Real Estate Commission, because it was cultivated from old versions of the final exam that have since been retired. And so it should give you a really good indication of where you stand. I still have to do some formatting stuff to get it, finalized and sent out to you. But I'm working on that this morning, and I'll get that out your way. Getting all that stuff uploaded into the class module. We've never used it before, so it takes a little while. But other than that, I think if you've done this math review packet and you have and you felt comfortable with that, and then you do those two, the national section review and the state section review. I think there's 130 102-ish, 130-ish questions in the national and 80 in the state section, right around that. So it's right around 200 questions total. And that's not meant to just bury you in questions. Don't feel like you have to do them all, but it's meant to just give you a real, live sort of look in at where you stand. And as long as you're, clicking along, 75, 78% and stuff like that, you're in great shape. So that, I wanted to give you that, here at the end. So you've got kind of a last, and feel free, obviously, to take it however you want to. If you want to take it, closed book, just see how you do. I think that's a great approach, especially at this point. If you want to take it, primarily closed book, when you come across something you just don't know the answer to and look it up, I think that's a really good approach. I think if you try to take it completely open book, you might die before you finish it. So that, because there's just so many questions at this point. And hopefully you've gotten away from needing to research, because the questions will become, even though they're not the same questions, they will become repetitive after a while. And that's a good point to get to when they become repetitive, because then you should be ready to go.
Hey, Travis.
Yeah, go ahead.
I have just one really quick question. I had emailed Seth, and I don't know if I sent it to you, but just regarding the background check. When I went on, I had done one for something earlier in the month. So when I go on, it just has status and it has the one I've done already, but it won't let me do another one. So I just didn't know if that was going to affect anything.
I would, if I were you, Court, on Monday, call the real estate commission, because they may need to get in contact with their provider and get a call for them. But I would call the real estate commission.
Okay. All right. Thank you.
875-8700.
What is it? 919?
875-8700.
8700. Okay. Thank you for that.
Okay. All right. So let me share this with you here.
Hey, Travis.
Yes, sir, Nick.
All right. So I know you spoke about it a little bit this morning about the storm that's coming this way.
Yep.
I'm out of Jacksonville, so we're probably gonna get in.
I'm gonna look at that later today and into tomorrow. And if it looks indeed like it will be directly impacting people, what I will do is simply delay the testing date back by a day or two. So it would be Tuesday or Wednesday. Most likely probably just push it back to Wednesday. If it looks like it's gonna indeed be, something that's impacting us. I don't want to say that right now that's gonna happen.
Yeah.
But if it looks like indeed it would be something that would be impacting a significant portion of the state, I think that's just the responsible thing to do, is to push it back. And if there is somebody who, because I don't know what people's schedules are booked out to look like, somebody who cannot do it during that time, we would deal with on a case-by-case basis, and they might have to take it with another class or, something like that. But that would be our go-to. And I hope that is not, I hope we don't have to. I hope we don't need to. But I do know that, obviously, for obvious reasons, some people may be looking at power outages and internet outages, that sort of thing, at least, especially if the storm is actually moving through. And if the storm is actually moving through, the last thing I want you to be is isolated from, any pertinent safety information or anything while you're trying to take a 4-hour exam. And if you've got to get things ready around the house. So that's going to be, I'm going to look at that later today. By tomorrow morning, you'll know from me what we're going to do in that regard.
All right. Awesome. Thank you.
Okay. And we try to, I want to try to make what is the most responsible decision, the same way we would if we were in class in person, which it would be the same thing. I don't look at it really as substantially any different, because if you're at home and the storm's whipping around, you're not going to be able to concentrate, even if you have power and internet. So I don't want you in that position. All right. So do we, I guess it's you all have the floor, so to speak. And obviously you have the answers to these things. I don't think we probably want to work through all of these because that would take way too much time. And I think there are probably ones in here that people just don't need to see. So do you all want to, does somebody have one that you want me to start with? And I don't mind if we, bounce back and forth. It's fine. Whatever works for you all, works for me. So you'll want to let me know one that you need or you feel like you need me to go over, we will do that.
Can we possibly go over number 26?
26. I was going to say, something tells me, Joy, that's going to be a closing statement question. So this is oh no, it's not. It's not. I'm sorry, I glanced at it wrong. This is the difference in interest paid over the life of 2 loans. So this is really, Joy, 2 math questions in one. Ultimately, it's fair game on the test to ask you how much interest is paid over the life of a loan. This question just asks you to calculate how much is the interest paid over the life of 2 loans and then compare them. So do you at least see, before we kind of go down this road, do you at least see that you're going to calculate the interest paid on the 15-year loan and the interest paid on the 30-year loan, and then you're going to compare the two? Does that make sense? Okay. So then how do we calculate the interest paid over the life of a loan? Because they have given us a bunch of information that, quite honestly, we just don't need. We don't need to know what the loan amortizes at in order to calculate the interest paid over the life of the loan. So you look at information like this right here, amortizes at 764. That's just not going to be important for us. And the same is true of the other loan, amortizes at 506. And I'll tell you another piece of information that's not going to be important when you're calculating the interest paid over the life of the loan. Believe it or not, the interest rate is not going to be important when calculating the interest paid over the life of the loan. What is important is the monthly payment. Mm-hmm. And we have 2 loans and we have 2 different monthly payments. Because here's the idea. If I have the monthly payment for principal and interest, and I know how many times I'm going to make that payment, then I can pretty easily calculate with just multiplication how much total I'm going to pay back on the loan. So that's what I'm going to look at right now. I'm going to say, okay, with the 15-year note, we've got a monthly payment of $22.92 a month times 12 months a year times 15 years. Does that make sense why we're doing that, Joy? Are you okay with it? Okay. So we're going to take that $22.92 a month, multiply it times 12 months a year. I have to get my calculator out here. $22.92 times 12 times 15 years. It's $412,560 total. Mm-hmm.
And that would be your total PI, right?
Total PI for the 15-year loan, right? And we know it's 15 because there's times 15 right there, right? And then we've got our other loan, our 30-year loan, which has a significantly lower monthly payment, which is why somebody might choose to do the 30-year loan if they couldn't afford the payment on the 15-year loan. And they're making that payment 12 times a year, but they're paying that one over the course of 30 years. So they make twice as many payments on that loan. So 15, 18. So here's the thing. Even before I do this math, just logically think about it. If I'm making twice as many payments, but the payment is not half as much, am I going to pay a lot more money back on this loan than the other one?
Yes.
Absolutely. So we got $1,518 times 12 months a year times 30 years. That's $546,480 in total PI. In both cases, we borrowed the same amount of money, which they didn't give us, but they gave us enough information to get there. They said that we were purchasing a $400,000 home, but only borrowing what percentage of that value?
75%.
75%. So that looks like a $300,000 loan to me. And if I subtract that $300,000 loan from each one of these, I will end up with the total of just the interest. So over here on this side, it looks like 112,560. And over here, it looks like 246,480. And then we just want to take the difference between those two right there, right? One minus the other. And if I do that, 246,480 minus, oops, I can't type, 246,480 minus 112,560.
133,000.
133,920. Yep.
So
I was just confused. It does. I was just confused and, setting it all up.
Yep.
Honestly. Okay.
So anytime so this is sort of like memorizing a formula almost. Anytime you're asked for interest over the life of the loan, what you're looking for is the monthly payment. That's what you're hunting for. All the rest of those numbers are not necessarily helpful. They're just kind of like background noise.
Okay.
Okay. And now here's what I will tell you. You could have shortcutted this slightly and got the correct answer.
Thank you. Oh, good.
You can. You can take the difference between these two numbers and you'll get the same answer, because they both include the same loan amount.
Right.
Here's the reason I go all the way down to the real final answer, because on some test questions, you might just be asked for the total interest paid over the life of a loan, and that would be these numbers down here. Does that make sense?
Yeah.
So even though you could have taken the difference between those two other numbers, I want to make sure you know how to get to just the interest paid over the life of a loan. All right. And I saw Jonathan put in the chat number 4, and then she wants 20. So I'm down. Are we good there, Joy? You okay now? Everybody all right with number 26?
I am. Thank you.
Good. All right. I'm going to back up here to number 4. Okay. So this is a closing statement question. And the reason I know it's a closing statement question is if I look at the final, the end, the question, what additional amount must be paid by the buyer when? At closing. So this is your closing disclosure worksheet, which if you remember the closing disclosure, when should the borrower see that? This is going to show up on the test, not a math question, but it's a theory question. When should the borrower see that closing disclosure in relation to the closing? Before closing or after closing or at closing? When should they get it? Before closing. So they have time to look over it and find any mistakes. How long before closing? Because they're going to test you on that. At least how long before closing?
3 days.
3 banking days, 3 business days. Most of the time when we talk about days, we mean calendar days. But for financial purposes, because this is a loan-based thing, remember that's a requirement of RESPA, the Real Estate Settlement Procedures Act, says that the borrower has to, and why do I keep calling them borrower rather than buyer? Because RESPA only applies when somebody's getting a what?
Loan.
A loan. So RESPA says the borrower has to get this closing disclosure at least 3 banking days before they go to closing. Okay. So here's what we're really looking at with a closing statement. We're looking at buyer side. Oops, I can't write with a highlighter. We're looking at a buyer side and a seller side. So here's my seller. Here's my buyer. And they both have credits and debits. Credits and debits. Now, obviously, we know the form is a little fancier than this, but that's basically what the form does right there. It just sets up credits and debits for each party. All right, so let's start reading through this thing and see which column to stick this stuff in. It says making a $4,000 earnest money deposit. I can stop right there because that is an entry in a closing statement. The earnest money is something that needs to go in the closing statement. Do we all agree with that?
Yes.
Okay. So I don't even need to, it's not like things have to be in a certain order. I think people start to hunt and peck and go, oh, let me do this first. I would just deal with them in the order they give them to me. That way I don't have to worry about forgetting something. So making a $4,000 earnest money deposit. Is the earnest money something that impacts the buyer only, the seller only, or both of them at closing? Now, don't think about contract. Don't think about the time when they go under contract. I'm just talking about on the day of closing. Does the earnest money impact just the buyer, just the seller, or both of them at the same time? What do you think the answer to that is?
Just the buyer.
Just the buyer.
Just the buyer. And I'll tell you why it's just the buyer. Because the buyer paid it, right? But the seller never got it. The seller never had anything to do with an earnest money deposit. That's still sitting in somebody's trust account. Does that make sense for everybody?
Yes.
Probably the closing attorney's trust account. So we only need to deal with that for the buyer side. Do we want to give them credit for paying the earnest money, or do we want to charge them for paying the earnest money? Which do we want to do?
Credit.
We want to give them credit. So we $4,000 earnest money deposit in a buyer credit. Is everybody okay with that?
Yeah.
Okay. Now we look at the next thing. It says the buyer contracted to purchase a house for $92,000. So we've got right here, purchase a house for $92,000. I'm trying to break them in different colors to break it out. Purchase price. On the day of closing, does the purchase price impact just the buyer, just the seller, or both of them?
Both.
Both of them. So we got to do something on both sides for the purchase price. Okay.
Credit the seller and debit the buyer.
That sounds like a pretty reasonable thing to me. Credit the seller, meaning give the purchase price to the seller, and debit or charge or take it away from the buyer. Does that make sense for everybody?
Yeah.
So for the purchase price, we're going to have a seller credit of $92,000. And we're going to have a buyer debit of $92,000. All right. It says the buyer can obtain a new first mortgage loan for $65,000. The loan needs to go in the closing statement. Does the buyer's new loan impact the buyer only, the seller only, or both of them?
Buyer.
Just the buyer. So we're only
buyer credit.
And so are we giving them credit for it? In other words, are we handing them the loan money, or are we taking the loan money away from them? Is that money they have?
Giving
Your credit.
Giving it to them.
We're giving them the loan money. Because if we didn't give them the loan money, they wouldn't have enough to pay for the property. Does that make sense for everybody? So think of, if you envision the lender, if the lender was actually standing there at the closing, they wouldn't be taking this loan away from the buyer. What would the lender be doing? They would be handing the money to the buyer, giving it to the buyer. So that loan is credit for the buyer. So we got a $65,000 loan credit there. And we said that was buyer only. And it says the buyer paid the mortgage company a 1.5% loan origination fee. Now, this is where you have to be careful. Loan-based fees like interest and origination fees and discount points are not charged based off the purchase price. They are loan expenses. So they're charged based off of how much the buyer borrowed. Is everybody with me on that? So it's not going to be 1.5% of the purchase price. It's going to be 1.5% of what?
The loan.
The loan amount. So if we come over here, that's a $65,000 loan times 1.5%. So our origination fee, what is that?
$975.
$975?
Mm-hmm.
Okay. Now, does the origination fee impact just the buyer, just the seller, or both of them?
Just the
Buyer.
Just the buyer. Just the buyer. It's the buyer's loan. Seller's got nothing to do with it. Now, origination fee. Is that something you think we would be charging the buyer on the day of closing or giving them credit for on the day of closing?
Charging.
You would be charging because it's a fee that they have not already paid. So that's a debit. So that's $975 in the buyer debits here. It says the balance of the purchase price will be paid at closing and in cash at closing. Let me show you what to do with that sentence.
Newsflash, nobody cares.
It's newsflash. That's the way they all work. That's what we're trying to work down to is an answer of how much cash they need to bring to closing. Does that make sense for everybody? So they throw that in there thinking you think you need to do some work. No, that of course they're going to pay it in cash. What else are they going to pay it with? Potatoes? I mean, like, it's just it's one of those things they just throw it in there as sort of a distraction to you. It says real estate taxes of $10.56 for the current year were paid by the seller in October. Additional, all right, so we need to deal with that. Real estate taxes for the current year were paid by the seller. We'll go with the yellow here, I guess. Were paid by the seller in October. So here we got this statement right here. Now, we're going to always have a tax proration on a closing statement. That's just the way these things work. We got a tax proration to deal with. Now I don't have much room to work with here, so I'm going to I'm going to make myself a little blank sheet to do this tax proration. Let me go back and look here. It says $10.56 for the current year. So here's what we know about the taxes. They are $10.56 for the year, paid in advance, right? So isn't that what it says?
Mm-hmm.
Yep. Okay. So what's our closing date here? November 15th?
15th.
Yes.
Right there. So here's what we know about the property taxes, that the seller owes them from January 1 through November 15th. November 15th. And the buyer owes taxes from November 16th through the end of the year, which is December 30th. Now, here's the absolute key to getting this correct. The absolute key to getting this correct is knowing whose taxes we actually care about on this thing. Is everybody with me on that?
Yeah.
When they tell us that the taxes were paid by the seller, and then I look at these two statements, the seller owes taxes. No, they don't. That's a lie because they already did what?
Paid them.
They already paid them. The seller does not owe any taxes. So I know this doesn't make sense in this case. Is everybody following me on that?
Mhm.
So the one that matters here is that the buyer owes taxes. That's the one I'm going to deal with. And before I do any math, by the way, if it says buyer owes, what do you think that's going to be on the buyer side, a debit or a credit?
Debit.
That's a debit to the buyer. And if it's property tax proration, whatever I debit one, I have to do what with the other?
Credit. Yeah.
Credit the other. So I know at the end of my math, this is going to be debit buyer, credit seller. Before I do any math. Everybody okay on that? Okay. So now, how much the buyer's taxes are. Here's what I know about the buyer's tax, or the tax bill, not the buyer's tax bill, but the total tax. It's 1056 for the year divided by 360 days. 1056 divided by 360 days. That gives me a little more than $2.93 a day, 2.93333, something like that per day. Everybody okay on that number?
Yes.
And so now all we need to know is times how many days for, here's the one we care about, correct? The buyer. How many days do
45.
they owe for? So they owe for all of December, correct? Which is 30 days. So they have 30 days in December. And then backing up, how many days they have in November?
15.
15. So that's 45 days that the buyer owes for. So times 45 days. That's basically 132.
Travis, quick question. I remember you saying that when you calculate taxes and everything, would we count the 15th, or would we start counting? Would it be 45 or 46 days?
It's 45 because you start counting on the 16th because the seller paid through the day of closing. The seller paid through the 15th.
Okay.
Remember, when you're prorating taxes, you're splitting expense. They don't both pay for the day of closing when you're splitting it between the two. One pays for the 15th, the other one pays for the 16th. Okay. And so unless you're told differently, the seller pays for the day of closing. All right. So 45 days, that's $132.
I have a question, Travis.
Yeah, go ahead.
Just to be efficient, I guess. Should we always add like 3 or 4 numbers behind, like what you did with the $2.9333?
I try not to round at all, but if I'm going to write it down, I try to leave it in the calculator. You know what I'm saying? Like I'll do 1056 divided by 360, and then I'll immediately do times 45 days rather than like clear it out and start over. That way I'm not rounding, because rounding can throw you off by a buck or so. But the good news is it's throwing you off by $1 or so on a closing statement is not going to matter, because usually those answers on the test are going to be rounded to like the nearest $100 or something like that. So you won't have to worry about rounding mattering. I just am in the habit of writing down 4 decimal places. That way I don't have to worry about rounding.
Okay.
So you got $132, and we said that was going to be debit, buyer, credit, seller. So if I go back over to my little worksheet, I'm just going to put $132 for tax. Oh, wrong one. Y'all supposed to yell at me. $132 in the buyer debit for taxes, and $132 in the seller credit for taxes. Everybody okay with that?
Yes.
So we've dealt with that. And then the last one it has here, the last thing it says is additional closing expenses that must be paid by the buyer amount to $578. So additional closing expenses that must be paid by the buyer, debit or credit?
Debit.
That's a debit, and just by the buyer. So we're going to put that in the buyer debits over here, $578 in closing expenses. Now, all we want to do is total up each one of these columns. So, I mean, they're only asking me about the buyer. So I'm just logically going to work on the buyer side. Could we do the seller side as well if we wanted to?
Yes.
Yeah. But they're asking me about the buyer. So I'm just going to work on the buyer. It looks like to me, I've got total buyer credits of $69,000 and total buyer debits of 975 plus 132 plus 578. 93,685.
Yes.
Sound about right? And the total cash the buyer needs to bring at closing is just those two numbers subtracted from each other. Big number minus little number. And that's how much money the buyer needs to bring at closing. So 93,685 minus $69,000 looks like 24,685 that buyer would need to bring to the closing table in cash or probably a cashier's check. Is that making sense for y'all a little bit now? Like how a closing statement is going to work?
Yeah.
Okay, good. It's just, like I said, it's just an accounting worksheet to try to, make sense of the math. That's it. I will tell you this. If you are struggling with either timing or struggling with the math overall, I would suggest you skip this question on the test and come back to it last. Because as you can see, this kind of question is going to take a significant amount of time. And you can know what you're doing on this kind of a question and still get it wrong because there's so many little pieces. I think Anna made the remark a couple weeks ago in class, like that was the frustrating thing about the math, and some of you got like 15 steps, right? Well, this is the piece of the math that has by far the most steps because you put one thing in the wrong column and you're off. Here's what I will also tell you. If you do it on the test and your answer doesn't line up with one of their answers, you have two choices. Now, if you've saved it for the last question, by all means, scrap what you did, start over, try it again. I don't suggest going back and trying to check your work because every time I've ever done that, because I make mistakes on these things too, I can't see my own mistake. But if I just do it from scratch, I usually don't make the same mistake twice. But if you haven't saved this question for last and one of your answers doesn't match up, guess and move on with your life. Because I have seen people, and they put this thing in the middle of the test for a reason. I have seen people sit there and spend 20 minutes trying to figure it out, and then none of their answers match. And then they get frustrated, and they spend another 20 minutes trying to do it again. And then they run out of time at the end of the exam. Don't do that to yourself. It's one question. Okay? So don't, I want you to be able to get it, but definitely one question. All right? I see number 20 and 24 over there. Sheila asked for 20.
You want to do Elizabeth first since she has to go?
I was going to say that, but I think she's already gone. I just looked up and I think she's already gone. I was going to see that was going to be my suggestion, but I think she's already gone. So I think we'll just go to your number 20.
Okay.
Yeah, I don't see her on here anymore. She would speak up right now, I think, but I'm just scrolling through. I think she's not here. She had to leave.
So 20. Yeah, 20.
Number 20. Does anybody need help with number 18? If you do, we're in trouble.
Oh, 18.
I don't know what happened there on 18. Number 20. I think when you see something this long, you have to go to the end. You got to find a question because there's too much information here to try to distill and deal with. You got to go.
Our question is different than yours.
Is it?
Now that I look at it.
Yeah, actually it was, but I did find it later in the detailed answers when I was going over my answers. And the question that's number 20 on that is actually number 29 on the packet he sent.
Oh, that's weird.
29 or 34?
There's a couple of them.
So is it this one then?
I 20 this one you had for 20 was 20 on mine.
Yeah, me too.
That's weird.
Yeah, same
Yeah,
here.
it was 20 in the worksheet, but in the answer worksheet it was 29, I think.
Okay, so is this so what's the question? Give me an idea what the question was, and then let me see if I can figure out what question it is.
It's an apartment complex has 28 bedrooms, rent for $650. I got it right, so I see that I'm good now.
Okay, so it is this question then. Okay.
Yeah, but on your worksheet, I show it on 34. Like, what am I doing wrong here? 20. Yeah, that's the question. But I got it. I got the right answer. Now that I look, my NOI was different than yours, and I couldn't figure out what I was doing wrong.
Okay.
So
all
I
right.
never
So
mind.
let's just take a look at this question. Let's just take a look at this question. It says, what's the value of the property using the income capitalization approach? Well, when you're using the income capitalization approach, this is where your knowledge of the formulas kicks in. Because remember, there's 3 approaches to value. The sales comparison approach, that's where you're using comps and making adjustments. The cost approach, that's where you're doing the land value plus the building value minus the depreciation. Or the income capitalization approach, which is a T-bar that looks like this, that's got the NOI on the top, and then down here on the bottom has the value or sales price of the property, and then the capitalization rate. Everybody okay on that formula? So that's the formula we're going to be using here, because they want to know what's the value using the income capitalization approach. They're asking me for the value. The formula sort of gives you a pathway. It says you need to know the NOI and you need to know the capitalization rate. So I'm going to, first thing I'm going to do is scan through all of this gobbledygook, and then I'm going to see if they just gave me those numbers. Because if they gave me those numbers, I'm not going to have to deal with a bunch of other stuff, because they do that quite often on the test. And so it says an apartment complex has 28 2-bedroom units that rent for $650 monthly and 18 3-bedroom units that rent for $825 monthly. The property tax on the complex is $28,850, and there are additional operating expenses that total $43,580.
Yeah.
I'm sorry. The monthly debt service.
What good a purchase it just does.
Where's the green piece of paper?
A bunch of crosstalk all of a sudden. The monthly debt service mortgage payments are $38.50 on the property. An appraiser has found 9.5% to be a reasonable capitalization rate for the area. Assuming there are vacancy and collection losses that equate to 5% of gross potential income and a net operating income of $304,340, what is the income valuation? Here's the nice thing. When I read through all of that, they give me net operating income. They also give me 9.5% capitalization rate. Does everybody see that?
Yeah.
So what am I going to do? All that other stuff, what am I going to do with it?
Ignore it.
Don't care about it. Don't care. Because those were all the numbers that got us to a net operating income. Those are the ones that got us to the net operating income. And so what our math is going to be is just the NOI of 304,340 divided by capitalization rate of 9.5%. All right. 304,340 divided by 9.5%.
3,203,578.
And some change-ish is the value of the property. So that one's just more about sorting through what you don't need. Okay. Everybody all right on this one?
Yeah, we're still going over 24.
Yeah, we can.
After that one, can we do number 2? I don't know why, but net, that whole net, it fucks me up.
Sure. So let's talk about 24 and then we'll go back to number 2. 24 is just, again, a misinformation question. It says a purchaser buys a home for $192,900 and assumes the seller's loan balance of $174,300. How much excise tax will be paid on the transaction at closing? Excise taxes is calculated based on what number?
Purchase price and not the loan amount.
The purchase price. The loan amount doesn't have anything to do with excise taxes, because you would pay the same thing in excise taxes as a seller, whether the buyer was getting a loan or not getting a loan, or whether they were assuming your loan or they were getting their own loan. None of that matters as far as the excise taxes go. The state wants their money. And so it is best just to look at what you don't need and get rid of it. So here we need that sales price of $192,900. I'm going to have a problem with that sales price though, because when we're calculating excise taxes, the state wants perfect whole dollar amounts for the tax, which means they want the sales price to be in perfect $500 increments, because the rate is $1 of tax for every $500 of sales price. And they don't round down. They always round which way?
Up.
So there's 2 paths you can take to this. I can take the sales price up to the next $500 increment, which would be 190 what? What's the next $500 increment? Perfect 193.
93.
And then I can divide that by 500. The other route I can take is just to do 192,900 divided by 500. If I do 192,900 divided by 500, I end up with a tax of $385.80, but the state doesn't take the change, so that's going to be what? $386. Or I can do what the state says is the preferred method, which is 193 divided by 500, and we should get the same tax either way. I will tell you, I like this method better only because it helps you remember that it's, the tax is charged on every portion of $500, and they may ask that as not a math question. So that's why I think it's important to, make sure you understand that. All right, I know Cassie said number 2. And then I see a question about 30 over there as well, so we'll take a look at that. Number 2 says an owner listed his property for sale with a broker. At what price must the property be sold to net the owner $14,000 after he pays a 10% commission and satisfies his mortgage of $22,000? So this is what we call a seller net question, because it's asking you, how much you need to sell for if the owner wants to net this or walk away with this much money. This is how much money they want left over at the end. That's what tells you it's this type of question. And so with this type of question, what I always do is I think of the transaction as a pie chart. And the seller gets a piece of the pie, and the real estate firm gets a piece of the pie. The seller gets the biggest piece of the pie, but there is a piece coming out that's 10% in this case. For what? What's that piece represent?
Commission.
The commission.
The commissions. And the seller's left with the 90% piece, correct? On this type of question, the math is always going to be to take the cash, so $14,000 they need, plus they need to pay off that mortgage of $22,000. So that looks like $36,000 to me that they need total at least to sell the property for. But if they sell it for $36,000, are they going to be short money? If they only sold it for $36,000, they're going to be short.
Yes, because the commission.
We haven't figured the commission yet. We haven't taken into account the commission. To figure out how much we would need to sell it for, including the commission, you're going to divide, because this is the seller's money or seller cash. You're going to divide the seller cash by the seller's share of the transaction. So you're going to take $36,000 and you're going to divide it by that 90% seller share.
I think it's that 90%. That's what messes me up every single time. I always forget that you can't do it off of what's in there. You have to do it what's not in there.
Exactly. You can't take, so what did you do? Took 36,000 and multiplied times 10% and then
once it started asking me how much the list price was, and my mind could not take that next step to
Gotcha.
What I didn't finish it.
Well, that's okay.
I don't know.
That's okay.
My notes.
But I will tell you that this is a very straightforward, repetitive question in the sense that they can't make this one any more complicated. So that, this one is one that once you got it, because they're not going to be able to roll it into anything else and make it more complex.
Well, thank you.
Okay. I see. Anybody else? Are we all good on those?
Well, there was one on Learn, Test, Pass, the same concept, and it also included closing costs. Mm-hmm. So that would just be added on to, like in this case, the $14,000.
That's exactly right. So basically, any cash, put it in the cash pile, and then so you deal with all the cash, add it all together, because it could say they got attorney's fees of $800. You would just add that in there. They got closing costs of $3,500. You would add that in there. Whatever, any cash, add it all together, and then divide it by the seller's share after the commission comes out. So, Cassie, just to make sure you're there with me, if this had said the commission was 7%, what would you have divided the 36,000? The 36,000 divided by what? If the question said 7% commission,
93 or
there you go.
Yeah, 93%.
There you go. That's exactly right. All right, I saw 30 twice, and then somebody asked for 29. So let's look at number 30. Okay. Number 30 says the property has an assessed tax value of $118,000 with a local ad valorem tax rate is 93 cents per 100 value. The property is under contract with a scheduled closing of April 18th and the seller owning the day of closing. The buyer will pay the tax bill in full later in the year when it is issued. Based on this information and utilizing a 360-day year, what is the correct entry on the settlement statement for the property tax proration? So they want to know, what's the property tax proration. That's where we're finally going, which means debit somebody, credit somebody else. I can't prorate the property taxes until I actually have a tax bill. Does that make sense for everybody? They did not give me the annual tax bill in this question, but they do give me an assessed value and a tax rate. And from chapter 3, I can remember that there's a formula that has those two things in it, assessed value and tax rate. And what's on the top of it?
Tax bill.
The tax bill, right? Annual tax bill. So I can use this information right here and this information right there to hopefully come up with a tax bill. So if I do the assessed value of $118,000 times a tax rate of 0.93%,
$1,097.
at $1,097.40.
Okay.
Now, who asked that question? It was Jonathan. Jonathan, what did you come up with for a tax bill, or where were you disconnected on the tax bill?
I was getting like 10. I was getting 10,000 instead of 1,097.
So
I think I did times 100, or no, I did divided by 93. I think.
Okay.
Instead of time.
You did divided by 93%, right? It's multiplication. It's the assessed value times. And remember, whenever you get that rate, 0.93 cents per 100 is the same thing as 0.93%. You don't move the decimal. You don't do any math. You just literally leave the decimal in exactly the same place and drop all of this dollars per 100 off and put a percent sign in there.
Okay. I see.
Okay. So that gives me the tax bill of $1,097.40. I'm going to write my two statements out. Seller owes taxes from the beginning of the year, which is January 1, through the day of closing, which is April 18th in this case. The buyer owes the taxes from April 19th through December 30th. Okay. Now I need to know which one of those I need. I'm looking to see what they tell me about payment of the taxes. I need to know whether they've already been paid or whether they still need to be paid. And here's what I see. It says the buyer will pay the tax bill full later in the year.
Have not yet been paid.
So they've not yet been paid. So now I look down at my two statements. I don't need to worry about the buyer owing taxes. Buyer owes taxes. Because when is the buyer going to pay their taxes?
Later in the year.
They're going to pay them later in the year. In fact, not only are they going to pay theirs, they're going to pay all the taxes later in the year. I don't need to mess with them. They are as far as owing taxes, I don't need to worry with them. They've already been charged too much. Does that make sense for everybody? Who has gotten away with not paying taxes thus far that we need to make the world right, make it a fair world at the closing?
Seller.
We need to charge the seller. That's whose taxes we need to calculate, because that's who we need to charge. We need to figure out how much the seller owes. And so I'm going to take that annual tax bill that we calculated of $1,097.40.
Divide it by 360.
I'm going to divide it down to a daily rate. And if I do that, I come up with $3 and almost about 5 cents, 30483 per day times 90. You know how many days? I've got all of January, that's 30 days. All of February, that's 30 days. All of March, that's 30 days. And then
108.
108 days.
108.
108.
Yep.
329.22.
329.22. And we said that was whose number?
Sellers.
Seller's number.
Debit. Seller debit, buyer credit.
And it says seller owes. So that's going to be seller debit that number. And if it's a seller credit, a seller debit, then it must be also a buyer credit for the same amount. So 329.22, buyer credit.
Huh.
Taxes are always going to be debit credit that directly offsets each other. So here's what's basically happening at the closing table. The buyer is saying, listen now, the tax bill's coming out later in the year and I got to pay the whole thing. You need to go ahead and give me your share of the taxes right now because I don't want to track you down later in the year. I got you right here. You give me your fair share of the taxes. And that's what's happening. That's what we're accounting for on the closing statement. Okay, we good there?
I just have a question on the rounding. Like I got 329.40 because I rounded it up to 305.
It's fine.
As long as we see that it's close, we can just go back and double check our math. Because do you know if the tests are going to round or not round?
Most of them will be rounded to the nearest, $10 or something like that. But none of the answers will be close enough that you're rounding.
Okay.
Because you got to remember, here's where the rounding creates an issue. If you look the number of days you're multiplying by, if you round it up by half a penny, well, 100 times 108 days is going to throw you off by 50 cents at least. So that's where the rounding comes into play, is when you're, multiplying by so many days. So, but it's like, in the real world, this is all done in Excel, so there's no rounding at all.
Right. Thank you.
Yep. Okay. What one did I see next? I saw 30. Did I see 20?
29.
29. All right. 29, again, very long. So I'm going to look to see if I see the question. Just going to scan through here. And when you look at and scan through the question, what should an appraiser find as the estimated market value of the property if it is found to have a net operating income of $422,300?
Oh, I know.
This one, they did not give you or say using the income capitalization approach. But I can assure you that if they ask you for the value of the property and they're giving you income, they mean for you to use the income capitalization approach. If they meant for you to use the sales comparison approach, they would tell you about comparable properties and what they had sold for. If they meant for you to use the cost approach, they would give you things like land value and depreciation. But when they give you the operating income of the property, they mean for you to use the income capitalization approach. And we talked about that formula looking like this. You've got NOI on the top, and down here you've got the value of the property, and you've got the capitalization rate. And so I'm going to read through and see, did they give me those things? 65-unit apartment complex has 50 units that rent for $900 each month, and the remaining 15 rent for $1,000 each month. The property sustains vacancy and collection losses that total 7% of the gross potential income. The property manager charges a 9% management fee, which is calculated based on the gross effective income. Other operating expenses on the property total $187,000 annually, and similar complexes in the area have produced a capitalization rate of 11%. I can stop right there.
Great.
Capitalization rate. I know I need that. There it is right here. Okay. So that's going to be 11%. What should an appraiser find as the estimated market value of the property if it has a net operating income of 422,336? Well, there's the other number I need.
See.
They gave me both numbers I need. Now, if you really wanted to do a lot of extra work, you could do Puppy Violet eats Oreos, not dog biscuits. and they gave you all the information you needed to get to net operating income. But why in the world am I going to do all that work when they gave me the number? Right? And so net operating income is 422, 336. The capitalization rate is 11%. T-bar says I should divide.
3,839,418.
Yeah, 3.8 million, 3,839,418 and some change is the value.
I think Travis.
Go ahead.
I think that's where I'm getting, like, I see the whole question and I feel like I'm supposed to use all the information and you just showed it there, the breakdown. So that, yeah, I think that's where I'm getting thrown off as I'm trying to like figure out everything and I forgot about
everything in there. Right. Exactly. And they do that intentionally because it's really a test of, do you know the formula? Like, do you, like when you go find the question, can you put the formula down? Because if you can put the formula down, it's like, okay, I'm looking for these two things. Oh, there they are. So, all right. So that took care of that. Everybody good on the income capitalization questions? We've done a couple of them now. We're good there? Okay, good. Let's see. Need number 12. Did you need number 10, Sheila, or are you okay?
You didn't have a number 10. I just want to know if anyone else got what they got for number 10.
I didn't have a number 10. Oh, you mean on the answer sheet it wasn't there?
Yeah.
Okay. So let's do it real quickly. It says if an unimproved land in a resort area costs $152,460 per acre, what is the cost of a parcel of land that is 200 feet wide by 350 feet deep? So we've got a piece of land that's 200 feet wide, 350 feet deep. And they want to know how much it costs based on 152,460 per acre. So what I would do is figure out how many square feet of land I have, 350,000, 350 times 200. That's 70,000 square feet, which I can then convert to acres. Does that make sense, Sheila?
Yep.
If they gave me a cost per acre, so I'm going to take that, and I know I've got a T-bar here that looks like square footage on the top and acres and 43,560 on the bottom.
Oh, yeah.
So I'm going to take the number of square feet, which is 70,000, divide it by 43,560. I've got 1.6069 acres at 152,460 per acre. It's like $250,000 to me. Does that sound right?
Yep.
I got 245.
245, but
I mean, I'm sorry, not 250, 245. You're right. You're right. I looked down, I glanced, and I saw 249,999, but it's 244. So 245.
Thank you. I just want to make sure I was calculating that right. So
Yep.
Thank you.
You are. You're good.
Wait, where did you get the 43,560 from?
That's a number you have to have memorized. That is the number of square feet in an acre.
Oh, okay. Okay.
That's the magic number for converting acreage to square footage or square footage to acreage.
Okay.
And I say that sentence over and over. Four women.
Yeah.
That helps.
Four blue-haired ladies driving 35 and a 60.
Yep. Because for some reason I keep wanting to put a 2 in that number.
What's so funny is when I was in elementary school, they made us memorize this number. B just had us say it out loud. We didn't have no little innuendos.
Yeah, right. Right.
Coming in handy now.
Anna, you do not have to worry about finding percentage of equity increase. That's math that they are continually paring the math down. And there was that kind of math in this packet, but this is the most recent run at things, and you're not going to be asked about a percentage of equity increase.
Okay,
Thank God.
because I missed that, and I was like, why do I not know this?
Yeah.
Okay, thanks.
Can we do a commission question? It doesn't matter which one. If you give me throw a number out at me, I'd be glad to.
Courtney wants 12 though.
Oh,
yes.
Oh, Courtney wants 12. Okay.
Yep.
At first I thought you said 41 is 12, and I'm like, what? And then Courtney wants 12, and then that makes number 12, the principal balance on a mortgage loan is $126,450, and the monthly debt service payment is $789.52. The annual interest rate on the loan is 5.5%. What will be the remaining principal balance on the loan after the next monthly payment has been made? So this is a question where they're basically asking us, do we know how much of this payment right here, this monthly $789.52, how much is principal and how much is interest? Because if we know how much is principal, then we can calculate the remaining balance on the loan. Does that make sense? Everybody kind of in that right mindset? Like, if we know how much of that $789.52 is going to go toward our loan balance, then we can tell you what the loan balance is after we make this payment. We need to know how to break that payment down. I will tell you, it is impossible to directly calculate how much of a payment is going toward principal, which is a problem because that's really what we want to know in this question. We want to know how much is going toward principal, but we can't directly calculate that. Can we slide in the back door by calculating the interest payment?
Yes.
Because if we calculate the interest payment, it must be true that the rest of the payment is going toward the principal. And so what we want to do is figure out how much of that $789.52 is going toward interest out of that payment. So what we're going to do is we're going to take our balance before the payment is made of $126,450, because that's what we're paying interest on. And we're going to figure out just how much interest would be owed for that month. So $126,450 times 5.5%, that's $6,954.75. Well, clearly that ain't the right number because that's bigger than the monthly payment. What kind of interest did we just calculate?
Annual.
That's annual. That payment's made monthly. So we need to break that annual interest down into
monthly
interest by dividing by 12. So we're going to divide that number by 12, and we end up with $579 and about 56 cents per month in interest. So here's my payment. I'm going to take a look at my payment now and what I know about my payment. My total payment is $789.52 for principal and interest. But the first $579.56 of that is going toward interest. If I subtract that out, oops.
209.95.96.
209.96 is going toward my principal. And so that's what I'm actually paying down on that loan. So if I come down here now, I should be able to say I started owing $126,450. I paid off $209.96. And that gives me a loan balance of 126.40. And about 4 cents. Okay. You all right now, Courtney, on that one?
Yeah, I think I looked at it wrong and multiplied something correctly. That's why.
Okay.
Yeah.
All right, Brittany found a commission question, number 17. Oops. Eek, go back. Okay. All right. It says Barry's a broker affiliate of Coldwell Banker HPW and is representing a buyer on the purchase of 418 Main Street in Garner. Barry has a 60% commission split with his firm. The listing firm of 418 Main, United Real Estate, has agreed to compensate cooperating selling firms by paying them 40% of the total 6% commission. If 418 Main Street sells for $418,000, how much will Barry earn? So there's the question finally. How much will Barry earn? We want to know how much the individual agent is going to earn in the transaction. The only way I know to calculate how much the individual agent is going to learn in the transaction is to set it up as commission tree question. To split it all out and let the numbers fall where they may. And this is the listing side over here. And then this is the selling side or buyer's side over here. Okay. So it says Barry is a broker affiliate of Coldwell Banker HPW representing a buyer. So Barry is going to go over here because he is the selling broker. And his firm HPW goes right there. It says Barry has a 60% commission split with his firm. Well, if his is 60, what is HPW keeping?
40.
40%. The listing firm of 418 Main Street, United Real Estate, so I can put URE over here. They're the listing firm. Has agreed to compensate cooperating selling firms by paying them 40% of the total 6% commission. Where am I splitting between the two sides? Where's the first place where we split this transaction into two sides? Is it here or is it down here? Where am I splitting it into two sides?
It's up at the top.
In the middle.
In the middle, yeah.
This one right here, right?
Mm-hmm.
Right there in that section. So it says, I'm going to read it again. It says the listing firm of 418, so the listing's on the left, has agreed to compensate selling firms, which are on the right, by paying them 40% of the total 6% commission. So the 40%, is it going to the listing side or the selling side?
Selling. Oh, listing. Selling.
Selling side. It says the listing firm has agreed to compensate selling firms by paying them 40%. So the selling firm gets 40%, which means the listing firm's over here at what percentage?
60.
60%. It tells us the total commission is up here at the top at 6%. And it tells us that the property is $418,000.
Okay.
Everybody agree with everything the way it's filled in there now?
Yes.
Yeah.
And they say if 418 Main sells for $418,000, how much will Barry earn? Well, there's Barry. And there's $418,000. And we need to know what it takes to get to Barry. To get to Barry from 418, you got to go through 6%. Then you got to go through 40%. And then you got to go through Barry's 60%. That's the only way you can get to Barry.
You're going to multiply, right? Because when you go down, you multiply.
Yep. So it should be $418,000 times 6% times 40% times 60%. What it should be. 60% times 40% times 60%. Looks like Barry gets about 6 grand to me.
6,019.20.
Mm-hmm.
He gets 6 grand. Barry needs to get a better deal. That good there now, Brittany?
Yeah, I just got the 40 and the 60 mixed up.
Yeah, that's where you got to be careful. The rest of it, most people get right. I would say make sure you're staying consistent. The listing side always on the left, just so you stay consistent with that. And then number 2, read that sentence carefully. And does it say the listing firm is keeping that percentage, or are they sharing it? Are they paying that percentage? And so if the listing firm is keeping it, put the number on the listing side. If the listing firm is cooperating or sharing it, put that number on the selling side.
Got it. Thank you.
Mm-hmm. I don't see any more in the list over there. We okay?
When you do front, like when you do it for like 16, when it's talking about per front foot,
mm-hmm.
What is the number that you do the first number? So you would do 3,850 times 110, right?
Yep.
Okay.
Times 10.
And that's per lot. So that would be per lot. Oh, my keyboard just stopped working. That's weird. So that would be 3,850 times 110 would be
23,500.
But we're selling how many of those?
10.
So times 10, cost of the land would be $4,235,000. That's per lot. And of course, it would be the same thing if you just wanted to say, okay, each one is 110 wide times 10 lots. You could do it that way. You could say, okay, that's 1,100 feet wide times 3,850, and you would come up with the same math.
I was about to say, because that's how I did it, and I got the same thing.
Yeah, it would be, because
okay.
you're just saying we have 1,100 front feet,
yeah,
and they all cost 3,850.
Okay.
Yep, either way works just fine. Okay, well, if nobody else has any other questions, then I mean, y'all seem to be in good shape. I mean, based on the questions, and there were some good questions, but it doesn't seem to me